Imagine $19 trillion flowing into the crypto market. Sounds incredible, right? This could become a reality with BlackRock's Bitcoin ETF. A Bitcoin ETF allows investors to buy shares that represent Bitcoin, without needing to own or store the cryptocurrency directly. This makes investing in Bitcoin more accessible and less risky for traditional investors, potentially attracting a broader range of participants. BlackRock, the world's largest asset manager with over $9 trillion in assets, is interested in launching a Bitcoin ETF. Their involvement signals a significant shift. With BlackRock's reputation and resources, a Bitcoin ETF could legitimize Bitcoin as a mainstream investment. Institutional investors, such as pension funds and mutual funds, may be more inclined to enter the crypto market, potentially unlocking trillions of dollars. The impact of this influx could be substantial. Increased investment could drive Bitcoin prices higher and bring stability to the market. Additionally, it could spur innovation and development within the cryptocurrency ecosystem, integrating digital assets further into the global financial system. While regulatory challenges and market volatility remain concerns, the potential benefits of BlackRock's Bitcoin ETF could transform the future of cryptocurrency. What is a Bitcoin ETF? First, what exactly is a Bitcoin ETF? An exchange-traded fund, ETF, is a type of investment fund and exchange-traded product, meaning it is traded on stock exchanges. ETFs hold assets such as stocks, commodities, or bonds and generally operate with an arbitrage mechanism designed to keep their trading close to their net asset value, though deviations can occasionally occur. A Bitcoin ETF specifically allows investors to buy shares that represent Bitcoin without having to directly own or store the cryptocurrency. This means that investors can gain exposure to Bitcoin's price movements without dealing with the complexities of managing a digital wallet or securing their cryptocurrency against theft or loss. The shares of the Bitcoin ETF can be bought and sold on traditional stock exchanges, making the process much simpler and more familiar for most investors. This makes investing in Bitcoin more accessible and less risky for traditional investors. Instead of navigating the often confusing and sometimes risky world of cryptocurrency exchanges, investors can purchase Bitcoin ETFs through their usual brokerage accounts. This ease of access and the added layer of security make Bitcoin ETFs an attractive option for those who are interested in the potential gains from Bitcoin but are wary of the operational and security challenges associated with direct ownership. BlackRock's role. Enter BlackRock, the world's largest asset manager with over $9 trillion in assets. Their interest in launching a Bitcoin ETF signals a major shift in the financial landscape. BlackRock's involvement brings a level of legitimacy and trust to the cryptocurrency market that few other institutions can match. Their move towards a Bitcoin ETF suggests that digital assets are becoming an increasingly important part of mainstream finance. With BlackRock's reputation and extensive resources, the launch of a Bitcoin ETF could significantly boost investor confidence. BlackRock's established track record in managing large-scale investments and their rigorous regulatory compliance standards could alleviate some of the concerns traditional investors have about the volatility and security of cryptocurrencies. This could make Bitcoin more appealing to a broader range of institutional investors who have so far been hesitant to enter the market. A Bitcoin ETF by BlackRock could attract a wave of institutional investors, including pension funds, mutual funds, and other large-scale investment vehicles. These investors typically manage vast sums of money and have the potential to inject significant capital into the crypto market. The resulting influx of funds could drive Bitcoin prices higher, enhance market stability, and foster further innovation within the cryptocurrency ecosystem. By bridging the gap between traditional finance and digital assets, BlackRock's Bitcoin ETF could transform the landscape of both industries. Potential market impact. So, how does this translate to $19 trillion? If BlackRock's ETF gains approval, it would mark a significant milestone in legitimizing Bitcoin as a mainstream investment. The endorsement from such a reputable and influential institution could alleviate many of the concerns surrounding Bitcoin, particularly its perceived volatility and security issues. This newfound legitimacy could pave the way for more conservative and traditionally risk-averse investors to consider Bitcoin as a viable addition to their portfolios. With Bitcoin gaining credibility through BlackRock's ETF, pension funds, mutual funds, and other large-scale institutional investors might start to allocate a portion of their vast assets to the cryptocurrency market. These investors typically manage enormous amounts of capital, and even a small percentage shift of their holdings into Bitcoin could result in a massive influx of funds. The sheer scale of these institutional investments means that their entry into the crypto market could significantly increase Bitcoin's market capitalization. The potential for unlocking trillions of dollars stems from the cumulative impact of numerous large-scale investors moving into the crypto space. As these institutions start to invest, it could trigger a domino effect, where the influx of capital drives up Bitcoin prices and market stability, further attracting more investors. This cycle could lead to an exponential growth in the overall value of the cryptocurrency market, potentially reaching up to $19 trillion. This substantial growth could not only enhance the financial standing of Bitcoin but also encourage the development of the broader crypto ecosystem, fostering innovation and integration into the global financial system. Why this matters? This influx of capital could drive Bitcoin prices higher, primarily due to the increased demand from institutional investors. As more money flows into the market, the value of Bitcoin is likely to rise, reflecting the heightened interest and investment. This price appreciation could attract additional investors, creating a positive feedback loop where rising prices bring in more capital, further boosting the market. Moreover, the entry of institutional investors would likely bring increased stability to the Bitcoin market. Traditionally, the cryptocurrency market has been known for its volatility, with prices often experiencing sharp fluctuations. However, with the involvement of large-scale investors such as pension funds and mutual funds, the market dynamics could shift towards greater stability. These institutions tend to have long-term investment horizons and more rigorous risk management practices, which could help reduce the frequency and severity of price swings, making Bitcoin a more reliable asset. Challenges ahead. However, it's not without challenges. Regulatory hurdles remain a significant concern for BlackRock's Bitcoin ETF. The regulatory environment for cryptocurrencies is still evolving, with various governments and financial authorities around the world taking different approaches. Gaining approval from regulators like the U.S. Securities and Exchange Commission, SEC, involves meeting stringent requirements to ensure investor protection and market integrity. This process can be lengthy and complex, with no guarantee of approval. BlackRock will need to work closely with regulators, demonstrating that their Bitcoin ETF adheres to all necessary regulations and mitigates potential risks associated with cryptocurrency investments. Market volatility is another major challenge. The cryptocurrency market is notoriously volatile, with prices capable of experiencing significant swings within short periods. While the entry of institutional investors could help stabilize the market over time, the initial phases might still be marked by considerable fluctuations. BlackRock's success will depend on its ability to effectively manage this volatility and reassure investors about the long-term viability of their Bitcoin ETF. The BlackRock effect has the potential to be a game-changer for the crypto world. Will we see a $19 trillion influx into Bitcoin? Only time will tell, but the future of crypto looks promising. At last, don't forget to subscribe our channel.